Hello everyone. Thank you for joining today's seminar co-hosted by Nissan Securities, Tokyo Financial Exchange and CQG. My name is Yuki Mogi, and I'll be presenting spread trading using our arbitrage tool called CQG Spreader. The CQG Spreader is our arbitraging tool that you can create and work your own trading strategies on collocated servers, and it gives you an advantage of trading in both speed and execution. Today, I'll demonstrate how to build spread trading strategy and manage risk settings using CQG Spreader. At first, we look for ticker code for products we trade using symbol search. Enter keyword as searching box located top left of window and search. From searching result, NASDAQ-100 recent contract symbol is NQ22JPY. Entering the code to such as ladder or chart displays corresponding contract. Then, we have to make sure whether we need any kinds of conversion. Today, I'll use spread between TFX Gold ETF reset contract and COMEX Micro Gold as a reference for liquidity purpose. Let's compare each contract. Gold ETF is traded at JPY, whereas Micro Gold at COMEX is traded at US dollars. Therefore, currency conversion is required. Also, when comparing contract sizes of each contract, Gold ETF underlies SPDR Gold Share ETF, which contract size is mostly equivalent to 1/10 troy ounces, and Gold ETF's trading unit is 100 times price of ETF. Therefore, we can consider the contract size of Gold ETF is about 10 ounces per contract. On the other hand, Micro Gold at COMEX trades 10 troy ounces per contract. Therefore, trading ratio is 1:1. Applying price to dollar function on chart helps us confirming ratio, as this function displays contract value in the currency of the instrument. As gold at COMEX is quoted in USD, we need to convert it by dividing JPY USD future contract. That gives a value of about 2 million yen, which is relatively similar to gold ETF. Now, we have all information of each instrument and are ready to build trading strategy. Click Formula on top of window and select Q Formula tab, where you can build, save, duplicate your trading strategy. There are several ways you can build trading strategy, but I'll show you the way that has more flexibility. At first formula, we convert gold at COMEX to JPY by dividing micro JPY USD futures on CME. Click Trade Execution Pattern and go to Size. At this section, traders can manage legs execution ratio. We're using JPY USD futures as hedging purpose, so I enter 1, meaning if you buy one COMEX gold contract, you sell one micro JPY USD contract. If you're using FX future just as conversion purpose, you can enter 0 to avoid execution. Once formula is created, Q number is assigned to each trading strategies, and we can use it as a reference. Another Q formula, create formula subtracting Q number of JPY COMEX gold from gold ETF. Open trade execution patterns again, and we enter 1 at both legs to adjust trading ratio. Now, let's see how spread trading works. Enter Q number of your trading strategy called corresponding ladder. Click legs to open your execution legs. You can place order by clicking on the left side for buying order and the right side for selling order. By default setting, Spreader automatically determines which leg is less liquid in order to make it fair first. The less liquid the contract is, the more difficult the contract gets filled. Therefore, the system tries to fill the leg that is less liquid at first. On trade execution pattern that I previously shown, there are more settings that traders can manage risk of spread execution. Let's have a look at some of those. Overfill management determines how aggressive the sequence in which the system operates the cancel or replace mechanism. Auto hedge overfills allows the system to get overfilled in the event of a swift market move, but lets the system manage overfilling and it will keep the execution ratio balanced. If you're more conservative, choose Avoid Overfills to avoid overfilling. Work determines which legs you want to actively quote. You can turn on the one leg, both legs, or none. When selecting none, the system turns into sniper mode. It sends both legs orders only when the spread price has been met. Price level controls gives you flexibility for your working leg. By default, the system only looks at the leaning leg's best bidder offer to determine the active leg's quantity. Therefore, if the leaning leg's liquidity is not sufficient, the system may place a lower quantity than what you specified. By increasing the number of levels, the system can look for liquidity at levels away from the best bidder offer. For example, when placing 50 lots of buying order with default setting, system looks at leaning leg's buying volume and places only 3 lots to active leg. By changing this setting to level 2, system places an additional order 2 ticks away from original order and places 50 lots altogether. Active price range specifies the range of ticks you want to actively modify your working order. This can be useful when you don't want to send overwhelming messages to the exchange. For example, I set price range of working order level to 3 and it sets system to cancel order outside of range. When working order is more than 3 ticks away from best bid or ask, order gets cancelled. Liquidity controls is a safeguard setting that defines what the minimum level of liquidity there should be to start placing orders and prevents spreader from placing orders when there is a risk of being leaked out. For instance, if you set volume multipliers parameter to 2, there must be at least twice as many lots available on the monitor leg than on the working leg for a spreader to start working the spread. If incomplete determines behavior when your order is leaked out or incomplete. You can choose either pay up a certain number of ticks or trail to complete the spread in the event you didn't get filled at the original desired price. You can also specify when to place these orders based on time in seconds or offset leg's liquidity. Our technical analysis integration into the ladder allows users to make use of indicators to drive orders. For example, traders can easily semi-automate a mean reversal strategy on the ladder. This is a daily chart of gold spread I created with the Bollinger Bands study. Hover the pointer on study and right-click. Then select Show Bollinger Bands on Trading Interface. Now Bollinger Bands high, mid, low bands are displayed on the ladder, and right-click on the icon on the ladder will place orders that follow the indicator every time it recalculates. For safety purpose, you can turn on notification that alerts you when order is partially filled. You can turn on other notifications based on your desired situation such as filled, partially filled, not acknowledged for specified seconds, and so on. This concludes the presentation. For more information about CQG Spreader, please feel free to contact us. Thank you for watching.